A big principle in acquisitions, being kind, don't be a that's like the big stuff, man. I hear no probably more than 9 times out of 10, and then we just follow up, and that's usually where we're winning deals.
Yeah, in the beginning, sure, try a couple different asset classes, see what you like, but once you find one that you like, stick with it and go all in on it. That's really where we started seeing traction when we started focusing fully on industrial buildings.
Well, I have this big chunk of money, I'm going to do it, and worst comes to worst, I'll go get another nursing job. And it
Good morning, everybody. Welcome to another episode of the Commercial Real Estate Blueprint Podcast. Today, we're going to be talking about mobile home parks with Tim Woodbridge. He's the co-founder of WCG Investments. He's a Carolina guy. He's on the South Carolina side, but we still accept him as a Carolina guy. Tim, I really appreciate your time today. There's just a lot of, I don't know, it's funny because there's a lot of beef between North Carolina versus South Carolina people, but you're still a Carolina guy, so we're cool. I really appreciate you taking the time today, and look forward to talking about mobile home park investing with you. For those that don't know you, give us a short little intro, how you got started in commercial real estate, and talk about a little bit what WCG is all about.
Yeah, man. Thank you guys so much for having me on the podcast, first of all. Also, I'm a Californian originally, so I'm like, I have no dog in this fight, as the saying goes. I'm a neutral third party. I'll let you take up the arguments with my wife and her family, and I wish you the best of luck, because I don't know if you're going to do so well there. But
The winner is North Carolina, but it's okay.
Yeah, so I'm Tim. I am a retired nurse. Worked as a nurse for about 8 years, got my degree from Northern Arizona. And yeah, I always, like, when I was in nursing school, I was like, man, I can't wait to do this. And then I'll be doing well, and I'll be making so much money. And I did, and but I was still not satisfied. And moved to South Carolina, had a little bit more time on my hands, and started reading more. And I'd always seen Rich Dad Poor Dad, and you go to Target, and it's right there. Oh, okay, that's an interesting title. And so I picked it up, and it's so simple, but it's so perfect, because it opened my mind to oh, okay, this is how people do things, assets, liabilities, new terms to me and whatnot. And so, yeah, I just did a deep dive into real estate and the different possibilities, and so reading and podcasts and all that good stuff. And then I heard Frank Rolfe was on the Bigger Pockets podcast, which I listened to a ton back then. Yeah, he brought up mobile home parks, and I was, he said there's low expense ratio, there's, sticky tenants. It was a little weird, a little bit different. I didn't even know you could buy a mobile home park, and it called to me, it excited me. And so from there, I did some more research, found one for sale by owner on mobilehomeparkstore.com, and just reached out. There's no magic there. It's just I put in the work, and started the conversation with this guy who was looking to sell his park.
That's awesome. That's awesome. I feel like a lot of people get their start reading books, obviously, and Rich Dad Poor Dad is a very popular book. I read that book, and it's just eye-opening. And we talked a little bit before recording. You have the Sam Zell book behind you too. That's such a good book. You have any other books you like a lot that are similar to that Sam Zell book? Because I've been trying to find some that kind of like the story of the deal makers, and it's hard to find good ones.
So different books for different times in your life and different times in your career, right? So you could see I got Buy Back Your Time right there. So that's a big one, but it wouldn't have meant anything to me when I started. Same with I don't have it behind me, but Traction, talking about EOS. I remember reading that, I think, after I had my first park or my second park, and the concept was great, but I'm not the implementer. I'm not someone who could do that. So it's okay, I get it, but I didn't implement it until meeting my partner Matthias, who is the implementer, who is that rock star, right? So in terms of finding deals, I think I'd say figure out what you're trying to solve for and then analyze a ton and make a ton of offers. So I don't think there's any like hack. I don't think there's anything crazy. I mean, sure, you can talk about creative finance. You can talk about, all sorts of interesting things on how to take down deals. But I think, especially for newer people, understand the fundamentals. In commercial real estate, it's all NOI driven, right? So revenue minus expenses equals your net operating income. And then you put a cap rate on that based on the type of asset and the area that you're buying. And that's the rough valuation. I'd say go one step farther and say, how am I going to buy this? Am I going to buy it myself? Okay, great. Do I have that much cash? How much return do I want? Am I looking for a 6% return, a 10% return, a 15, whatever. But at least you can solve for that then. Are you, raising capital from investors? If so, what kind of returns are you looking to give? We make sure that we're like, 2xing someone's money in 5 years through cash flow and appreciation at a minimum, because we know that if we're getting a deal that achieves those return metrics, then we're going to be able to raise. But, I'm kind of going off on a tangent here, but I'd say for people who are just starting, the thing you need to define is, what does a deal look like to you? Because I get that all the time. Oh, is this a good deal? It's like, bro, I have no idea, because your good deal is different than my good deal. So like, people need to take a step back instead of just like, I'm going to find a deal right now. It's like, no, tell me, exactly simply, what is a good deal to you?
Well, tell us what is a good deal to you, because I want to know. What do you guys look for?
Sure. So, and it changes all the time. And in terms of changing, meaning like it gets bigger. So, I have a team of people now. We are good at this. We've done it a ton of times. And so it's more like deal size now. We look in the Southeast because that's where we live. That's where we buy. That's where we know. So we like to keep doing that. And so, a deal used to be a $3 million deal. Then it was a 5, and now it's, 10 million plus, if we're being honest. But I can say at the heart of things, not much has changed. It's a 16 to 20% IRR for investors. It's again, 2x equity multiple, so doubling someone's money in 5 years, or like 2.25 over 7 years, depending on the deal and the business plan. So yeah, I mean, we look for bigger now, but the fundamentals are still the same. We really like keeping it simple and doing the same thing over and over and over again, doing all these little value adds because we know what we're good at.
Yeah. And I think, to go back to your original point of, you guys were very clear on what you're targeting. I think that's probably one of the biggest things we tell people is you got to get really clear on what you're looking for, right? And then when you understand, okay, I need a 16 to 20% IRR, that's what you're targeted, and you make all of your offers off of that until you finally get that. Something that I was curious about is you're looking for a little bit bigger deals. Curious, because you're looking all over the Southeast. If, let's say, you're going to go to a town that you haven't been to before, what is your threshold size of a deal in order for it to make sense for you to do that deal in a new market versus if you're going to go to an existing market, okay, maybe we can buy something smaller. I'm curious your thought process on that, and especially for someone who's looking to buy their first mobile home park that might be in a different town, what do they need to kind of look for in order to make that deal make sense for them to buy it, as far as like a management piece and including the return?
That's a great question. So first I'll answer like what we look for. So if it's a brand new town, we're looking minimum 200 pads, all like within, a driving distance. So we can really get some good economies of scale. Like, we're closing on a deal in Alabama, new market to us, and it's 283 pads over 5 parks. And so like stuff like that's very attractive to us. If it's in a market that we already own a ton in and we love the market, then yeah, we can definitely buy smaller, but like smaller is always harder. We have 100 pads in Spartanburg, and we bought a 16 pad in Spartanburg as like a bolt on, but it's just harder to close. It was very interesting. You think it'd be simple to close, but it was for us really, really difficult. You're working with a bank, like a local bank that doesn't necessarily know the asset class, and just raising for it. I mean, there's not a lot of meat on the bone. And then to your second question about really, for someone who's new, my opinion would be buy something relatively close to yourself. Buy, my first park, 36 pads. It's like an hour and a half from where I lived. So, I could really get there and be hands on and like figure all the stuff out because my goal was to learn all the operations. If that's your goal, you're like, hey man, I want to do this. One day I want to get out of my job and like I want to build a big portfolio, then yeah, like getting there and learning the ins and outs and the nuts and bolts that can really help you. Obviously, if you're looking to be more passive, I mean, it doesn't have to be. I'd say you're probably doing yourself a favor if you go and like visit the property so you can understand it a little bit better. Spreadsheets are one thing, but like actually getting on site and seeing like, oh, this is what unit one is, or this is what pad one is, or so on and so forth. That kind of makes things a little bit more real.
Curious, what made you decide that? Because you talked about from your story of you retired as a registered nurse after I think 8 years, and then you decided you wanted to go full time into commercial real estate. What was that? How did you make that transition happen for someone that might be looking to actually make the switch to full time real estate, as opposed to someone that maybe speak a little bit to what we're talking about for the podcast as well, with for those that maybe going and switching into full time commercial real estate isn't exactly what they should do, and maybe they just need to be an LP. I'm curious your thought process on that.
Sure. Yeah, I mean, so first, if you're thinking, hey, I want to get out of my job and I want to do something else, except that it's scary. I mean, it was really scary for me, and there's a million things that are scary, and I just recognize that it's scary, and I'm worried about this, and then I move with that. I don't try to push it away. I acknowledge it. But for me, like there was at least almost 2 years of overlap of me working as a nurse, 12-hour shifts in the hospital, and me owning a mobile home park and operating that. So like I was really building that foundation to be able to leave. With that being said, did take like a leap of faith, meaning, it was 2021. I had sold my condo that I had. I had like a decent amount of cash in my bank account. I think it was either I had the first one and was about to get into the second one, or I had the second one as well. But either way, I didn't have even close to replacement cash flow. And I just, took the bet like, oh, well, I have this big chunk of money and I am going to take the leap. I'm going to do it. And worst comes to worst, I'll go get another nursing job. And, I just took a bet on myself and it worked. But I will say, like at the all 2022, I'm trying to figure out things to do. I'm not going for mobile home parks. I'm trying to do this and this and this and this, and it was all crazy. And at the beginning of 23, I'm looking for another nursing job because I'd built equity. I'd gotten into my third park, but you can't live off equity. So I was seriously looking for actual bringing cash in, like from a job. And there's nothing wrong with that. Had I taken a nursing job, I wouldn't have thought of anything as a failure. I would have thought, okay, this was a great learning experience. Now let me, with this job, let me figure out long term how I can be just in commercial real estate full time. But yeah, it's a journey, man. It's definitely a learning journey.
Yeah, that's encouraging to hear. We're kind of in that right now. So I've been doing brokerage for like 8 years. Started buying deals about 2 years ago. Jesse's been in brokerage for about 2 years, and we have a little bit of cash flow. Definitely not enough to live off of. We've built a good amount of equity, but like you said, equity doesn't pay the bills, unfortunately. So I'm curious. You said you looked at getting a nursing job in 2023, but you did not. So what was the differentiating thing? Like what happened to where you started making money to live off of again?
So in 22, I was like, oh, okay, I love mobile home parks, but I need to live off cash, even though I had savings. So it was the freak out of not having that regular paycheck come in. And so I tried to do like single family wholesale and like spent a ton of money on marketing and VAs and everything. I don't like wholesale. It's not my thing. I like the paycheck or the oh, there's all these people making millions of dollars on it. Yeah, that's what I love. And so, I at the end of 22, I realized, okay, it's not for me. And what I need to do is figure out how to make money, like cash, consistently with what I do love. And so, yeah, I'm looking for a job in the beginning of 23. And there are a couple deals, mobile home park deals that I was working on with some joint venture partners. And it changed in my head. I was like, I need to pay myself in the way that people pay themselves. So I took an acquisition fee and I took consistent management fees from it. And again, like, so the management fee, it wasn't like full replacement income, but like the thing I've learned with being self-employed, owning a company, stuff like that, it's not the same as a W-2. So like that big acquisition fee, that's like I got to split that up into, okay, I've like, how can I make that last through and kind of replicate, okay, I have this much burn rate on like the bills that I got to spend, and then I have this much acquisition fee, and then just split that up, and yeah, it was just, man, I need to pay myself cash from the thing that I love, because I am doing a service. I am finding deals. I am putting deals together. I am managing things. So like these need to pay me for the work that I'm doing. And so in 23, I closed 3 deals with partners, and we took, the acquisition fee, the property management fees. And then at the beginning of 24, I started working with my partner, Matthias, who is another co-founder of WCG Investments. He is a rock star when it comes to underwriting and business plans and implementing. He was the COO of his job that he's since retired from. And from there, he made sure that in the underwriting, I'll make the offers because I'm still lead acquisitions, but he makes sure that in the underwriting, we're paying ourselves consistently. Every month I have a pretty consistent check, if you will, or ACH or whatever you want to call it, from like all these different parks. And like that wouldn't have been possible without him coming on board.
That's awesome. I have 2 questions from that. One, like somebody wants to go out and build their own company in the acquisition world, whether it's, mobile home parks, retail, whatever it is. What is a reasonable acquisition fee to charge? And then 2, what is a reasonable management fee to charge? So that's the question number 1. And then the second question is, was that a tough conversation with your investors? Did you like switch models like you had a couple deals and you said, well, hey guys, we're going to start trying acquisition and management fee, or were they pretty receptive to it?
I'll start with the second one first because it's easier. So they're joint venture deals. So, simple JVs. There were no investors in any of the deals before Matthias and I started raising capital. So yeah, it was more just talking with the partners. Hey, like I'm going to take acquisition fee on this one. We all can take it on this other one that we're working together. Like basically, let's pay ourselves for the work we're doing. And the same with management fees. Hey, I've been managing these for a while. I've kind of built these systems. I'm going to be taking this 5% management fee paid to my company, my property management company. Oh, and then what was the first one again? I knew I was going to get lost.
No, you're okay. So basically I was asking I asked about management fee, which you just answered 5%. And then I asked about acquisition fee, but you stemmed another question from that. So like, I'm curious how much you charge for that. But then also you said if it was with JVs, were you guys just financing the acquisition fee, basically just lumping it into on the back end? Or was it like just coming from your own pockets and then you were just taking it back? Get what I'm saying?
Yeah. So 2 to 3% generally for acquisition fee. As the deals get bigger, it might get, less of a percentage, but we'll see. And then, yeah, they were like creative deals. So like, there were kind of cashback at close deals, which pluses and minuses to those things, as someone who didn't have money, like that is very enticing. But I will also say, let's see, one of those, so there's 3 deals. One of those deals was really good. One was fine, and one is very much limping. So yeah, we paid ourselves, but like, should we have? Man, looking back, I don't know. We probably could have used some of that money for good and actually getting the parks back in order. But you live and learn.
So tell us a little bit, you told us about some of your backstories and your deals. What's your portfolio look like today?
Yeah, so we have 25 parks, a little over 1,100 pads, about to buy 5 more parks and the 283 more pads.
Oh, that's incredible. And that's just all across the Southeast. Is there any in North Carolina or?
Yeah, yeah. The good one from 2023 is in North Carolina. We are looking at an RV park, long-term RV park, the only kind of RV parks we like in North Carolina right now. Have looked at a lot of different things, but yeah, man, we love everything in the Southeast for the most part.
That's awesome. What part of North Carolina? I'm curious.
Spruce Pine,
Spruce Pine. Oh, cool. So
so
that's out. That's out
little town,
Asheville.
little town in the mountains.
Yeah,
Yes.
that's really cool. So did you guys have a big issues with the hurricane?
We didn't, but the town did. Like the whole little downtown was underwater. A little, some things, but not as like we're a little bit higher up on a hill. Thank God.
Yeah, for sure. Because it was catastrophic. It's terrible, terrible. I know Spruce Pine was one of the
Bro,
ones that got hit hard.
Asheville, man, that was it's crazy when you're like, oh, I remember being there, and then it's just destroyed. Like it's heartbreaking.
Yeah, it is. It really is. Is the RV park also in that area?
No, no. So it's on market RV park.
So now, what makes you want to go into RV parks now that you've done 1,100 pads and mobile home parks? I'm curious the transition there.
The short answer is we don't. I don't like RV parks. I don't want to. The only way it makes sense is if it's long term and if it's run like a mobile home park. So, like the thing that we look for is, people who have been there for years and years and, have long term leases and stuff like that. And yeah, I mean, we don't like transient. Like the fundamentals the same. We like people who are there for a long time. And yeah, I mean, with that, the one we're looking at, and we went and visited. Everyone, like, there are decks and stuff, and it's like these RVs are not, they're not moving. Like, there's skirting on some of the RVs, all this stuff that, like, you can tell that they have been there for a while and they plan to continue to be there for a while. So yeah.
I was going to ask with the skirts and stuff like that. I thought there was a lot of like regulation around how long people can stay at RV parks, or I guess maybe it's differs by county.
I think it's different by municipality, and that's one thing that we'll definitely check into in due diligence. But yeah, there's a ton of people who make a lot of money with RV parks, with transient RV parks. That's not our game. Like our game is affordable housing and sticky tenants. That's it.
I love it. I think there's a lesson in your story, which is, and I think we're all very guilty of it, like me especially. I even went through a segment of time where commercial brokerage deals were a little slow. When my friends was doing wholesaling, he was making a lot of fast money, and I was like, I want to do that too. And so, you put your foot in the door at trying to wholesale, and then you think, oh, I could buy a RV park, or I could do this or whatever. But like just sticking with one thing that you're good at, your example is being really good at mobile home park acquisitions. You guys know how to buy them, you know how to find them, you know how to run them, and that's your thing. And that's why you've been able to scale to so many parks in seems like, pretty quick amount of time. And I feel like there's a lesson for people. It's like, yeah, in the beginning, sure, try a couple different asset classes, see what you like. But once you find one that you like, stick with it and go all in it. That's really where we started seeing traction when we started focusing fully on industrial buildings. And, that's what allowed us to actually go. And then specifically in a small little market too. I'm curious with mobile home parks of that size, I'd imagine you guys are getting most of your deals through brokers.
Yes.
Nice. Do you do any other types of marketing for deals?
I do not. I don't like going off market. Like sometimes people bring me deals and that's cool. But no, man, that's like a whole nother system that like you're building. And for us, it's just like it makes sense more, especially for me. I don't want to convince someone to sell. I want to talk to someone who's ready to sell and see how we can get them their price. And I mean, it doesn't happen, but we try our best. But yeah, we definitely make that nice win-win for sellers. It's like, okay, like I see you want this price. I want to give it to you. Here's probably the reason why I can't give it to you, because I have to hit these return metrics to raise money and blah, 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 blah. But like, yeah, just let's have a conversation. Let's be on the same side of the table. Let's talk about how we solve your problem of wanting to sell, my problem of wanting to buy, and the broker's problem of wanting to get commission. We can all walk away from this happy or mostly happy.
Yeah. That's a big deal. I've talked about a lot about this, but like depending on what kind of properties you're buying really determines the source of where you're going to find it. Like we bought several buildings in the last couple of years and all of them have been off market, but they're little buildings. They're under 20,000 square feet, industrial, mom and pop owners. And so like we have a lot of success with going direct to seller. But, we talked to another guy in another podcast who's buying retail centers and they're anywhere from $4 to $5 to $6 million or more. And it's like that person is going to list it with a broker. Mobile home parks that are 20 million or 10 million, that's probably going to be listed with a broker. And the fact that you said, I'm seeing more and more why you're so successful is, you have focus. You don't try to do anything else. You literally just keep it simple. You look on the market and when they come up, you make offers. And I love that because a lot of times it's very easy to get overwhelmed by I need to send mail, which we do. I need to cold call. I need to text people. I need to do all these different types of things, a million different avenues to try to find deals. But if you just focus on one, you could do really very well. The broker or the guy who's also a broker, but part of the acquisitions team was telling us that's what he does too. He just calls brokers. So I'm curious, out of all the properties that come on the market, how many offers do you have to make? And then like how many final rounds are you in? And then how many are you actually winning out of because I imagine there's a lot of competition for these bigger mobile home park deals.
Yeah, but okay. Like if there's a final round, I'm usually like, okay, like I gave the best offer at first. I don't like sure I understand that acquisitions is a game and usually, we have a little room to go up, but not like a crazy amount of room. So a lot of times when it's, best and final, I'm just like, okay, I'm just gonna step back. If this other person can do it, let them have it, and good for you guys. But yeah. It's funny, you were talking about like all the different ways you can do acquisitions. And for a long time, years ago when I was starting, I was like, oh man, I got to go off market because that's where the best deals are. And like, I knew I should, but I didn't. And like, so it's like, if I try and do mailers, if I try and cold call, I'm going to do nothing. So I do what works for me. So there's not a right way to do it. Do what works for you, and that you can be consistent on. In terms of, gosh, I hear no so often, it's not even funny. But I all the brokers that I submit to, like an LOI, a letter of intent to, I've already had a conversation with them, or if I haven't, then I have a conversation before I submit it, and I'm like, this is why my offer is so low. I have to hit these metrics for investors, and if I can't, then I'm not raising the money, and I'm not closing, and it doesn't make sense anyway. So like it's always I come at it like I want to hit your number. I want to hit your client's number. I want your job to be easy. And here's why I can't. So I'm not just putting out a random lowball offer. It's like, yeah, it's lower, but I have a reason why it's lower. And if it doesn't work, if someone else comes in higher, good for them. I hope the seller takes that. I hope they get a ton of money and let's do the next one together. Definitely I've learned a big principle in acquisitions, especially with brokers. Being kind, don't be a dick, be easy to work with. That's like the big stuff, man. And then, if someone else wins out, don't feel bad about it because there's always going to be another deal. For us, I hear no probably more than 9 times out of 10 in the first round. And then we just follow up. It's like, sweet, I hear you. I get they don't want to take this offer right now. Can I follow up in a few months and see where it's at? And that's usually where we're winning deals. Oh, it's been on the market for a few months and no one's really done anything with it. Do you have any numbers, like updated numbers where we could run it through our analyzer and see if we can get you a better offer? And maybe you will want to go a little creative because you've been on the market for a little bit. I don't know. It's just be nice, be genuine, and follow up. That's what works really well for us.
Yeah, and especially working with brokers. For brokers, and since we're brokers by day, when you have a buyer that's going to take the time to look at the deal, underwrite it, and give you actual feedback, not just, well, I want it to be at this price, and that's all you can kind of hear, or no, it's not for me. When you actually hear that feedback, it's really good, and it makes you know that you're working with a really great buyer. I'm curious on the financing side. It sounds like you buy a lot you're buying a lot of bigger deals, but you might include some smaller ones with them. Do you see a lot of seller financing? I'm curious your ratio of seller financing versus like bank financing that you've been doing to take these deals down.
Not a lot, not a lot. But so like with every LOI I send, there's always like a all cash at close. We're syndicated. There's a them carrying like a seller equity position, so they gift the new LLC 19%, kind of a hybrid where we get a bank loan and they do that, and then the third offer is all seller financing. It depends on the person. It depends on who's selling, where they're at, and their ability. So not a ton of seller financing, but there's some. There's a few we have in our portfolio right now. But I just ask for it. I ask for it every time. Sometimes it makes sense. I mean, you really you look at the offers I send, and like say someone they own it outright. So the one I'm thinking of right now that we own, the guy developed this park with his dad, and so he's owned it outright for a long, long time, and we couldn't give him his price unless he got creative with us, and so it was okay. We can do your price and our terms, and he said, no, I don't like that. I want more down and more a month. And I said, okay, let me, here's our analyzer. Let's look at it together. So like I'm not just making stuff up. Like let's talk on the phone, or if you want, let's get on a Zoom. We can go through the analyzer and let's see what the returns are. And so yeah, he eventually said, okay, yeah, I could do that, and I like that because I get a steady income stream because he's got the first mortgage on the property, and like it's interest only for 5 years. So we're giving him his price. We're giving him, gosh, like $5,000 a month. I want to say off the top of my head. So he's getting 60,000 a year for 5 years, in addition to his purchase price. So honestly, like he's waiting a little bit, but if you take a step back, he's making so much more with it. So it's a big home run for him, home run for us. And again, it's not for everyone, but for the people who can do it, they're very happy with it.
Yeah, that's massive. A lot of people don't understand that, and interest only. And then also if they offer it, they don't explain it the right way. We do the exact same thing. We say, here's your down payment. Let's call it $1 million property, and you get $200,000 down. So you're getting $200K down. Then you're getting, let's just say another $200K in interest over the course of 5 years. So that's $400K. Plus you're getting your note paid off at the end of that balloon payment of like 5 years. And so you show them the total of what they're getting, the down payment plus the interest over the several years plus the balloon. And like you said, they're making way more money. And a lot of times they'll see that and be like, oh wow, I am making a lot more money. And a lot of people I know don't necessarily go through the way to explain that. And I have to remind myself that like sellers are not, a lot of sellers, or at least, mom and pop sellers, they're not in spreadsheets every day like us. They don't understand this stuff fully. So like you have to explain to them. They might not even know what interest only means. I mean, a lot of them probably do, but you have to really just go above and beyond, laying out the clear picture of, if you do this, yes, your cash flow will be a little lower, but you're making far more money in the long term. And that's just an expert move for sure.
Yeah. I with all the LOIs I send, it's bolded and highlighted. This is what you get at close. This is what you're going to get each month. This is the total amount of interest you'll get over the life of you holding it. And this is the total you get, like everything together. So it's like, yeah, definitely simplify it, because what is it? A confused mind always says no.
100%. 100%.
On that deal, with you're doing it interest only, there must be some kind of way for you guys to instantly add a ton of value. I'm curious if that's more mobile home parks, or maybe selling the actual trailers to the tenants. I'm curious what that instant value add is, because not every deal you are able to actually do interest only and really work. You can make that offer, but you might be overpaying in the long run. So you got to be careful just about making interest only offers. But I'm curious why it works for that.
Yeah, and that's totally a good point. Sometimes I look in the analyzer, like as I'm making an offer, I'll be like, IO versus a 30 or 25-year AM or something. And it's like, oh, sometimes the returns are better for that 25 or 30-year AM versus IO. So yeah, it's very dependent on the deal. In this deal, it works because it was so under market rent. And so, we got in We put in, new paved roads because it was all dirt before. So spent, $100,000 or so on the roads, and then, it's $200 under market. So we'll slowly but surely go up. They're all tenant owned already, so there's no like selling homes. There's nothing like that. But yeah, we're just like, okay, well, everything else in those markets, 400 to 450. You're 250, or sorry, I think I want to say 220 when we took it over. So if you're looking at it from like a cap rate perspective, we bought it for a, like way crappy cap rate, but there's so much value add to be done there, in a slow but sure way. So yeah, I think we went up 65, $75 in year one, and then we'll go up, 50 year two, 35 year three, and so on and so forth, just until we're hitting like right at, or slightly under market. But yeah, it's things like that where it's like, okay, like we've seen this so many times. I know how to extract the value from this in a non greedy landlord sort of way. Just like, okay, like let's do this. Let's also understand that we have affordable housing tenants who, like, if you say, hey, you're going to have to pay another $200 in your rent starting next month, that's oh my gosh, that's crazy, man. It's some people do that, and it's heartbreaking because it's like you're taking advantage of all these vulnerable people. But yeah, I mean, getting in there, doing some good work, increasing things a little by little, so you're making sure that the property value as something non-mobile home park doesn't get, eclipse the value of it as a mobile home park, is you don't want it to be like, oh, okay, well, I kept rents super low forever thinking I was going to do good. Now I'm selling it to someone and they are like an apartment developer, because this piece of land is worth way more to them to develop it as apartments. Now all these tenants got to move their home, and it's a train wreck. So yeah, I mean, for all the people who are like, well, it's affordable, why are you raising rents? It's like, well, we have to, because long term, if we don't, then it's going to be redeveloped into something else, and that's way worse for everyone.
Yeah, and they're having that big jump of like 200 to 450, because a lot of people, like you said, will
Yeah,
just go ahead and do that. And $200 a month to a tenant, a low income tenant, is a lot of money. That's a lot of money.
yeah.
I'm curious. You keep mentioning that you've mentioned your deal analyzer multiple times. Is that just a spreadsheet you guys run, or do you have some kind of AI thing set up?
It, until recently, yeah, it's just a spreadsheet. It's someone sent it to me, and then we edited it a little bit for our needs. I do like the mobile home park owner community because everyone's really, for the most part, really kind in sharing things with others. So yeah, we have that spreadsheet. It's multi-page analyzer. Yeah, now we've been using Claude to put the basic inputs into it, and then we're like, okay, like it saves our team a ton of time. And then let's look at it, make sure that everything like came out correctly, and then we can validate the business plan. Like, okay, it's easy for anyone to take a spreadsheet and be like, this is what we have to do. It's another thing for us to be like, well, we've done this. Is this real? Like, can we really do this in a reasonably accurate way? Or, are we trying to do too much based on the reality of things being difficult sometimes? So yeah, the AI helps for sure in a lot of ways in our business, but it doesn't replace the higher functions.
Yeah, 100%. 100%. Well, this has been, I think, incredible. Learned a lot about mobile home park investing. And I think the audience probably got a lot of valuable information out of it as well. If people want to find out more about you, maybe they want to invest with you, check out your website, whatever it is, what's the best place for them to do it?
WCGinvestments.com.
Awesome. WCG Investments. I'm curious, what does that stand for?
It's all of our last names.
Okay.
So Woodbridge, Carius, Grunwald.
Okay.
We keep it easy.
Nice. That's awesome. So you have a third partner in it.
Yes.
Awesome.
Vinny Carius. He does all of our investor relations stuff. He's so good at it, man. I'm so blessed today to work with such amazing people.
That's awesome. Are you guys all in the same area, or are you spread out across the country?
So Matthias used to be in Spartanburg, and that's how we took down that deal together. But he's in Tampa now, and Vinny is in Albuquerque. So We just met in a mastermind, and just it partnerships an interesting thing because I've had a lot of different partners in my day, and all of them for the most part, all of them are great people. It's just we don't work like click in that same way. And then when I started working with Matthias, it's like, oh shoot, like this is what it's like. You're great at this and I'm not great at this. I could do this better than you. And it's like everyone's really good at what they do. And then Vinny, he's great at taking care of all of the investors and answering any questions that they may have and getting to them right away. And everyone's really phenomenal at what their role is in the company.
That's awesome. Yeah, I feel like that's really important. If you have partners, everyone has to have a clearly defined role. And but if you do that well, partnerships are awesome, and you can scale a lot more so than if you're just by yourself.
Bro, I'd have not even close to the success that I have now without the partners that I have.
Yeah, absolutely, absolutely. Well, cool. Thank you guys so much for listening to this episode. Be sure to go check out his website, connect with him, and we'll see you in the next one.
Thanks for having me.